Thank you for attending the Namoi Cotton Limited Annual General Meeting for 2020. Our shareholder presentation will begin shortly. Your key presenters will be Namoi Cotton Limited Chief Executive Officer Michael Renehan and Chief Financial Officer John Stevenson. We will conclude today's proceedings with a question and answer session, and we encourage you to submit your questions during the webinar via the chat process.
Good morning. My name is Michael Renehan and I'm the Chief Executive Officer of Namoi Cotton. I welcome you to today's webinar with my Chief Financial Officer, John Stevenson. We look forward to today discussing with you in more detail the financial results of FY20 for Namoi Cotton. I would also like to acknowledge that we received some late questions in the AGM, which both John and I will address in the course of our discussion this morning. Equally, please put your questions through. We will answer them either midstream or, if time permits, at the end of the session. What I would like to do before we kick off and talk about the business performance, the financial performance, the strategic challenges in front of the business, or the global outlook, I would like to make sure that everyone understands from both our shareholders, our growers, our investors, that we are in the middle of a transition of a great company. The drought has brought with it the necessary changes that we needed to make within the business. But we are resolving the legacy issues that have long dogged Namoi Cotton. We are making sure we're a simpler business that is clearly understood by you, our investors. And so today, let us take you through part of that journey. First, in terms of business performance, safety is our number one priority. We will talk about our performance in this very important element of our business by looking at the activities of our staff around their sites in terms of their effort and commitment, training and attitude to safety and well-being. We have also had to respond to the last 2 years with falling volumes with a flexible workforce. Our teams have relocated to different sites. We've been able to utilise not all of our assets, and we've ensured that our business is right-sized to deal with the drop in volumes. We've equally seen volatility in the market. We've seen, particularly in our lint trading business, some real challenges with risks and global shocks that we have had to respond to. And finally, we want to bring around a new way of thinking within our industry and adopting best practices in terms of technology, processing, and working with technology with our customers. It would be remiss of me not to talk about COVID-19, which came in the month of February of this year, the last month of our financial results. Everything is clear in hindsight, as we have just completed the current ginning season with minimal impact from COVID. But I can assure you that our staff and people on the ground, with fantastic cooperation from our growers and our contractors, have ensured that there has been little impact through good practices, procedures and approaches in ensuring our facilities stayed open. Indeed, we had a support team on standby if the need arose. However, the same cannot be said, unfortunately, within the cotton lint trading market. We have certainly seen significant impact with delays in shipping, with drop-offs in volumes and orders, particularly from our northern clients. We've also seen some challenges in the local Australian market. The merchant Waylin, who deals with a lot of our growers, has gone into administration and caused significant disruption in the Australian market, where cotton gin was required to be procured for overseas demand. I should remind you that we are operating in the same market, and Namoi Cotton has delivered to its growers in full, in time, every time this season. But there has been a significant financial impact of COVID in our trading and marketing business. And we estimate that to be in the order of 6 million Australian dollars for the 13 months up to March 2020. This is a result of delays and us positioning the mark-to-market of our portfolio appropriately. We should also talk about some of the operational activities that are important in the FY20 year. Certainly, our lost time injury frequency rate has come down. It has moved from 20 to 13 in the FY20 year. And that has been through considerable focus of our staff around toolboxes, housekeeping, and on-the-ground activity that has kept our people safe. We've also ensured that our environmental impact has been minimised through the recycling and use of some of our traditional waste products, such as cotton trash, that has been used in low-grade feed rations. We have modernised our organisation, and we have kicked off internally a program called Fresh Start to bring about this change. We have great people within our company with great skills, great experience, and great commitment. And giving them the extra tools and support to drive the business forward has been one of the exciting challenges that I'm pleased to be part of. We now have a streamlined organisation in place. And we also acknowledge we are part of the community. At all times, we look for local resources to help in terms of our casuals, our contractors, and we understand that local expertise within the regions of New South Wales and Queensland are extremely important in us being a premier ginning organisation. So let's turn to the issues around our modernisation. What does it mean? Well, first it means resolving legacy issues in front of the company. One of the common themes that came from our investors over the last 12 months is Namoi Cotton is a complex organisation. And we have sought to simplify that and make it clear how this business operates. We have had to take cost out of the business as an absolute critical element to remain viable and strong over the current drought period. And this was all completed with not only the support, but at the request of our people, and was done with due consideration and respect for those living amongst our communities. We have also changed our organisation. One of the challenges was reconnecting our gins back with our growers to ensure that we streamlined, but also made the process with our growers transparent and efficient to deliver outcomes for their business. Our engineering team has spent considerable effort in standardising the gins and building the internal capability such that we can do things with minimal effort and minimal cost over this drought period. Commercial development keeps an eye on the future though, and we are making sure that those opportunities are properly packaged and presented in a way that the company can seize not only the opportunity, but the front-running position to take advantage of them. And finally, our internal services, despite being reduced with the restructure, have certainly been very much strengthened within the human resources, the safety, and the financial management of the business. Some initiatives that we kicked off in FY20 that I will take you through in more detail in the webinar are mainly with regards to our NCA joint venture. And we, with the support of the board, took a very strong position to de-risk our exposure to business volatility. We wanted to make sure that we understood the capability of our balance sheet in trading in a global market. And certainly we need to maximise the gins' capability in taking bales. And that was absolutely critical in improving the returns both on our warehouse and packing assets. We also recognised that we had to be strongly connected to our growers. And the portal has provided that strong linkage that was upgraded to provide real-time information, contract information, that empowered our general managers in each of the valley to work with our customers and our growers to deliver good outcomes for both parties. I will now hand to our CFO, John Stevenson, the floor to talk about the financial performance of the company in more detail.
Thank you, Michael. It's an honour for me to present at my first Namoi AGM. I look forward to meeting and talking with as many investors, shareholders, customers as I can over the coming months. You've heard a number of presentations and many numbers quoted, so I'm not going to spend a lot of time analysing the FY20 results, particularly given that we will be releasing our half-year FY21 results in less than 1 month. But I will highlight some of the key items again, and the major ones are on this screen. You can see that, as we mentioned, the significant reduction in volume in FY20, 63% reduction in ginning volumes down to 450,000 bales, had a significant impact, negative impact on our operating results. Resulted in a net loss after tax of 10.99 million. Before tax, that number was a 15 million loss. And it also resulted in a negative operating cash flow of $2.1 million. But I do want to highlight that FY20 was the start of a major restructure for the company, both in resetting the cost base as well as simplifying and providing a base for future operations in our joint venture operations. But that restructure, those restructures came at a cost, with a number of one-off items negatively impacting on the results. And as Michael's just said earlier, FY20 was also negatively impacted by the commencement of COVID-19, which resulted in a drop in global cotton linen prices, and which has ultimately led to various counterparty defaults. If you look at the numbers on a segment basis, you can really see the impact in the ginning volumes, in the drop in the ginning volumes. The ginning business, as the ginning segment, has reduced in profit by over $12 million from FY20 versus FY19. And that has been the major issue that we've been focusing on for the future. But some of the positives to come out of FY20 are in this slide. You can see that our contribution per bale has actually increased, and is now at $72 per bale, which reflects very strong cottonseed pricing. But also our operating cost base is reduced by over $14 million year on year, which is a 33% reduction, albeit it comes at a higher price per bale given the lower volumes. But with those lower volumes, you can see that the net contribution per bale is only $7. And that's not enough in order to cover other costs, such as the depreciation, decrements, and then the finance costs. I do want to spend a few minutes just on this slide talking about where our contribution and operating costs per bale are trending. FY20 ginning volumes of 450,000 bales compares to a 3-year average for Namoi of just under 889,000 bales. The average contribution earned by the company over the past 3 years was $60 a bale. But you can see our FY20 actual contribution was $72 per bale, which is 18% above that 3-year average. And although our operating costs per bale have increased, you can see there that they're $65 for FY20. On an average 3-year volume, those operating costs are trending down, and they're 18% below where they were in FY18. As noted in the earlier slides and the earlier comments, there's been a number of non-core items, non-recurring items that have occurred through the year, and these remain high. You can see that the joint venture operations remain a negative and a drag on the core ginning business. We've also had the restructuring, non-recurring restructuring costs that we've mentioned earlier. Given these tight conditions, there's been a very disciplined approach to capital management. As Michael's mentioned, capital expenditure has been prioritised. The net tangible asset backing remains at 87 cents. Net debt has increased slightly. Net working capital has also increased slightly. Net debt has increased due partly to the cargo resolution as well as reclassification of lease liabilities, but also due to the operating loss that we've incurred. Our primary bank, CBA, remains very supportive of the company, and our debt facilities conclude a $42 million long-term facility plus $12.5 million in working capital facilities, which are sufficient to fund the company's future operations. I'd also just point out on debt that on an overall basis, net debt to capital ratio of 27% is a reasonable number. In summary, I'd just like to point out that FY20 was a very tough year, but it does mark the start of a major restructuring program that will help reposition the company for the future. I'll now hand back to Michael.
Thank you, John. And on that theme, we need to talk about the future, where we are on that journey and what is ahead of the business, particularly for the next 12 months. Now that we have secured an agreement around the NCA restructure, we need to implement the benefits throughout the organisation. For those that aren't aware, the NCA business consists of 3 components: the trading and marketing of lint in the global market. It also has upcountry warehouses to service this business in a cheap and cost-efficient manner. And we also have a packing business that's been based on our generation of cottonseed that now handles grain and other bulk packing. The increased volatility due to COVID-19 in this year has seen considerable counterparty defaults and deferrals and losses for traders, and ultimately defaults for growers. We've also seen that there are reduced marketing options for growers given the exit of some brokers in the market. This all has contributed not just to the uncertainty within the market, but the opportunity for Namoi. And we, with our partners Louis Dreyfus, have established a new organisation that is not just right-sized, but is properly funded to make sure that the Namoi brand, which is strong in the international market, leverages the opportunities that our history has given us. We are also going to look at expanding our core activities to make sure that what Namoi does is focus on its ginning and focuses on its sourcing and procurement of lint as the counterbalance to Louis Dreyfus's global reach. We believe this is a great partnership going forward, and we are both committed to making this succeed. It was a complex transaction, and I will now ask John Stevenson to describe the asset split and the structure of the new organisation.
Thanks, Michael. This was a very complex transaction, and you'll note the ASX announcement we released to the market earlier this month. We thought it was useful to provide this one slide in order to just give a snapshot of what the structure of NCA looks like post this transaction. NCA is the joint venture that has been in place, which Namoi owns 51% of, and you can see that is represented in the top half of this slide. It had a net asset value as at the end of February 2020 of $58.7 million. And Namoi, just to be very clear, Namoi continues to own 51% of that business going forward. The new business, Namoi Cotton Marketing Alliance, which you can see in the bottom half of this slide, of which Namoi owns 15%, will now conduct the future cotton lint and trading market business. And this will be funded from Louis Dreyfus going forward. I'll just pass back to Michael.
Okay, thank you, John. There are other things that are important now that we have resolved some of the legacy issues such as NCA and cargo. And certainly in this economic climate where there is low volumes, low asset prices, there are also opportunities. And we are actively reviewing our position in the Australian cotton industry to make sure that we can seize the opportunity to reshape the industry. We're also ensuring our services are integrated into the requirements of our growers so that we can value add the logistics supply chain. COVID will remain with us for some time, and as next season looks far more promising, we need to make sure that our facilities are kept safe and secure to be able to meet the needs of our growers in this critical phase, not just of cotton, but also our packing business as well. We are committed to driving increased returns on our assets and also driving efficiencies through the operation of our gins, our warehouses and packing assets. And more long-term is making sure that we take advantage of automation as our growers work in real time, require online information and need that to be readily available. So what is the outlook for the next season? Well, the next season has been pretty much completed, although we are still ginning in the southern valleys. Ultimately, the Australian crop came in at just over 600,000 bales, a far cry from 2 years ago where it was 4.5 million bales. Our share has remained solid in this period at 120,000 to 130,000 bales. But it has meant that we have had to continue to focus on our efficiency and operation of our sites. We have not run all our gins this season and have prioritised our people around capability that's required for our farmers. However, there has been continued volatility in the global lint cotton market, and we are still seeing some challenges within the trading and marketing business of NCA. Our ginning margins are under pressure, but cottonseed price has certainly been the mainstay of our business as it was last year. The NCA restructure is now complete. We have a new executive team in place. We have an exciting pathway forward for the company, despite the challenging headwinds going in front of us. So before we turn to the questions that we will receive from our investors and shareholders, just to kind of reinforce and reaffirm our market guidance, which our chair detailed in the AGM. We believe the Australian 2021 crop forecast remains at 2.1 to 2.5 million bales. The rainfall has not been consistent, but what we have seen across the board is water storages increasing in volume. There's been good rainfall in the southern valleys, probably in some cases too good, as there are delays with getting winter crops off this current season. Equally, the northern valleys have their challenges, as they need probably that further La Nina rainfall of September and October to confirm their plantings for next season. Out west in Bourke, we have certainly seen a very confident start and structure that makes us confident for that part of the world. So with that, I'd like to open up the floor to questions, and I'll ask John Stevenson to read the first one that we received whilst the AGM was on. John.
Thanks, Michael. This question came in earlier from James Jackson. Now the company has been de-risked with the NCA restructure. What is the board doing to ensure that the company's share price reflects the true intrinsic value of the company? Currently, the shares trade at a discount, and on that point, as we noted in the presentation here, the net asset backing was at FY20 was 87 cents and opened today at 32 cents.
Okay, so in response to that question, one of the things that the board and management are very mindful of is to make sure there's clarity with what the core business of Namoi Cotton is. The confusion often of our trading business with our ginning business, with our cottonseed business has not been clear. We have put considerable time and effort, particularly in this year's reporting, but in also our future plans, to clearly identify which parts of the business are making a return and which are not. And we believe this information, as well as the work that we've done on the NCA restructure, will make it clear for our investors and our shareholders to realise the full value of our assets. John.
The second question that we have received, Michael, is from Mitch Taylor. Mitch asks, what is the rationale of the March 2025 call option as part of the NCA transaction? And what is the strike price?
Okay, well, if I answer the first, and John, if you take the second. So, in this complex NCA restructure negotiation, one of the issues that came on the table, and quite rightly so, was if Namoi was to sell down or move its position down in its exposure to the trading business, then if that business became more successful, that Namoi should have the option to move back and take a position for a peppercorn amount. Both parties agreed that this showed good faith and commitment to achieving a great outcome for the NCA new joint venture. That was the rationale behind it, and certainly, in my view, shows goodwill and good faith between the partners. John.
I'd just add to that, in our announcement on the transaction, we noted that the Namoi holds an option to increase its share in NCMA from 15 to 35% for a nominal value exercisable on 1 March 2025. I can confirm that nominal value is $1.
Thank you. Are there any more questions?
I do not have any more questions at the moment, but
I would like to thank you for coming online. It has been a challenging, not just AGM, but webinar where we tend to get interaction from the floor and obviously further inquiries and questions that inform our shareholders. We will be posting these presentations on our website and on the ASX announcements platform. And as always, we are available to meet and discuss the Namoi business with our shareholders, our investors, and our communities. Thank you for your patience and participation today, and I look forward to working with you over the coming year with our new executive team. Thank you.
thank you.